Well, good afternoon, everyone. This is Dewey Mosley, bringing you today's daily trading update for Team Jireh, 25 November. We're just now getting to the market close, at least for the regular markets. I have a couple more hours in the futures markets. Just as a reminder, remember that over the holidays, many markets close, so futures and currencies might have limited trading tomorrow, and then they'll open up at nighttime after the day's over. So even traders take a break on Thanksgiving. So that's good. So all we want to do, as always, is just kind of go over our positions and let you know how things went today. And hopefully you can learn something from it. So what you have on your screen, again, is the 30-year bond futures. When you take a look at what's going on, you'll note that I'm not currently in a position. And for this one, I'm just really looking to do some opportunity trading, not really trading any of our normal strategies, but on this one, I'm experimenting a little bit with some trends and some channels. So far, I think I've been more lucky than good because I really haven't found a very reliable way to employ it yet. But the last couple of trades have been good. You remember yesterday we had a brief winner. So just to kind of let you know what we did walking into today, you're looking at the 1 hour time frame. And you can see I've just kind of marked out, I have support and resistance above here, have some pivot points, and I also have some trends and channels that I've been tracking over the last day or so. And what I'm going to do is I'm kind of zoom in on what took place today. And I'm learning a little bit about how these work, but again, not totally confident in its reliability. So basically, you see this trend that kind of developed as we broke out of the price channel here. You see the trend that developed, and what I did was just started a new trend line, carried it over parallel, of course, but then I adjusted a little bit for what it's actually doing on the top side. And then what I did was just to kind of get a little bit more granularity, I came down to the 15-minute level, and I will show you the actual trade that I took for a very small profit, but any profit is a good profit. So what you see is we broke out, and I initially started, well, we actually hadn't quite broken out yet, but once we broke out, I kind of took the very next point along what I believed was a new trend or channel, connected it here. And the one thing I have observed about this is, you know, if you're going to work on a trend line, it seems to be better to catch it very early in the trend, because it seems to me that the longer it goes, the less likely it is to keep going. So by the third bounce, you kind of want to be in on the trade. So basically saw this bounce happen, came all the way up to the top, kind of confirmed what's going on up here. And then I just kind of waited down here, and you had your trend line, you had a pivot point to the extent you can depend on those, but it came down and actually hit the line. So I said, what I'm going to do is, because it's in a bullish trend, I actually want to be buying on the bottom here. So I went ahead, just placed a trade right kind of in the elbow of this bounce down, caught the trade on the way up. And what I did was, as it was starting to go up, a lot of times they'll tell you, well, wait till it goes all the way to the top. What I was looking at was this purple line is actually the daily trend at a much higher level. So let me show that to you. I'll just show you 3 months, 1 day. Okay, so you can see this is a longer daily trend, right? That kind of cut through right where we were coming up. So recognizing that, I said, you know, I'm not going to get overly greedy on this trade. If I can just make a small profit by making its way up to there, that would be good enough for me. So when I come back down to the 15-minute level, literally I got in on the trade about right here. And then as it broke up to, again, this purple line, that's the daily trend, downtrend, I went ahead and just took that profit. You know, if you count that up, that would be 45 minutes, and that's not a bad profit. So that was fun. And I liked getting that profit, but I still say what makes this kind of difficult is, as you can see, it came all the way back down and hit the same trend line, right? And logic would tell you, well, why don't you just jump back in? Well, I didn't jump back in, but had I done so, especially if I jumped in as it crossed down, certainly would have been a loss. One of the things I found it better to do is to kind of follow the candles down to try to get on the trade as it's coming back up. That probably would have saved me until I got to the point where I said, okay, this is clearly a broken trend and there's no need in trying to get in on it. And in fact, at this point, I would really start looking at, let me adjust this. I would really start looking at a new trend here, right? Which looks something like that. Not perfect, but close enough, okay? Start looking at a new trend that looks something like this. If you want to draw the bottom side or try to, at least on a parallel level, I can duplicate the drawing there and just go ahead and drag this down. And it's probably not going to line up very good. Now, part of the problem is I probably wouldn't quite do this yet because I'm still at the 15-minute level. And I kind of want to have enough action to go back. Whoops, sorry. I want to have enough action to go back to the 1 hour and do this. And it doesn't look like it's done that. If you look at this at the 1 hour level, 3 days, 1 hour. You can see it's barely giving you enough points in action to draw it very well. You know, so I'll let this develop a little bit before I get into it. But that was one successful trade there today. Let's jump over to the S&P 500. And I will just try to stick on this one to explain. Well, I'll go back and show you what we've been talking about as far, you know, and I've actually come up with a name for this strategy. I'm going to call it the trampoline. It is more appropriately called a bull put spread or a bear call spread combined with some directional trading using market structure and anchors. But instead of saying all that, I will just call it the trampoline, and that'll make it easier. So let's get in here and take a look at the S&P 500. And let me zoom out so you can see what's going on and explain what our strategy is and how it's working out. This has actually been doing very well. One moment. All right, so originally what we had was this area right here. You can kind of consider this the original surface of the trampoline. And when it went bullish right here based on market structure, I went ahead and put in a trade that profits if it stays above this line for 21 days, which would be the end of this box. So far, so good. Anytime it dips into or starts to come back towards the line, of course, I have a hedging trade that makes money in the exact equal amount almost as this trade loses as it approaches the line. So what the effect you want to create is either a trade that is break even if you're wrong and makes money if you're right. That's the effect you're trying to create. And again, the only price you pay is if you get any type of consolidation around one of your anchor points, and we'll start to eat into that profit. But so far, we're doing pretty good. So as you can see, and let me show you the second one too. So we had a little bit more market structure come in. So I was able to build another trampoline that's a little bit higher, all right? And again, if it stays above the bottom of this box, same effect will happen. So I actually have two of these working. And anytime it gives me market structure, it's something that I would like to continue to build, whether it's going up or going down. So that's the big general idea. And like I said, if we can get to the end of the box without coming below the bottom of it, then that's a winning trade. So let's come down and take a look at how our hedge has been performing. And I do this on the 15-minute level just to get a little bit more clarity. And I'm going to come down to I'm going to try to do this on 3 days. I think that's sufficient time. And let's get over to the futures because that's where I have my hedge. Okay, now the great news on this trade, I've marked out the break-even levels, which is where I would like to enter my hedging trades at a minimum. So you can see that my hedge based on the different accounts are here, here, these white dashed lines, and all the way up here. So, and then my anchor is where I have currently set my hedge to start. So the far, in this case, because it's a bullish strategy, if my anchor is above my break-even points, then I am on the right side of that hedge, and that's the way I want to be. The great news is because of this move right here, you can see that it's just kind of continued to make its way through anchor points, and I've gotten my anchor pretty well above almost all of my break-even points, which is a really great news story. Even better, you can see that I am currently in one of those hedging trades, and I'm waiting on a second one for that second box. It is good news for me if I am above an anchor point or below an anchor point. What I don't want to see is any consolidation right on an anchor point. So far so good. This one's made a little money as a hedge. If it comes down further and stays down, that'll be great. And so this is really working out, making plenty of money on both of the short option strategies, the bull put spreads. And so far, I have not exhausted it in terms of consolidating. So what I do like about this is you can kind of see the progression of anchor points. In this case, I was able to hit R2 at one point. And then yesterday, it made it all the way up to the close. Or today, it made it up to the close of yesterday. So I have my anchor point all the way up here. It is my desire to get all those anchor points up here and then either have it sit below or sit above. I do have one other trade on that's a little bit more complex, and I'll save that for another day. I might explain that once it finishes profiting there. But that's what's going on here. Really happy with this strategy. I think it is the most stable, conservative, and least risky trade that we put on, but I'm really happy with this. Okay, now let's get over to what we're familiar with, which would be the euro. And again, at least last time I looked, we're having pretty good success. So on this one, we're using a mountain climber. Having an awesome day today, absolutely awesome day. So kind of told you what went on yesterday, even though we were asleep during what went on yesterday. This evening, I decided to employ trailing stops. And let me kind of zoom in on today so we can see what's going on. I decided to use trailing stops in order to make sure that, you know, if something did happen overnight, I at least give myself a chance to make a little bit of profit rather than just losing on the up and down. So as you can see, this was the evening of yesterday, all right? And at this point, we were actually long into the trade. Let me back up a little bit because I know it's a little bit hard to see where we left off. I think I recorded at noon yesterday or thereabouts. So we'll back up this far. All right. And what we saw is we did end up getting long. I did move my anchor point to the other side of this support resistance zone. I think that's just wise. We didn't end up getting long once we got above. And then while we were long, I just kind of hung in there. And I set when I went to bed, I set my trailing stop at about one behind. And the phenomenon we saw happen is it actually pulled it up above my anchor point, came down and closed for a profit. By the time I woke up at 5 o'clock in the morning, I came for a small profit in my account. And at this point, I saw it was below my anchor point. So I'm looking to get long again. I was able to do so. And then based on market structure, just follow it right up to my anchor point. And so far it stayed above for a very nice profit. Very happy about that. And if we just, kind of hang in there, what we want to see happen is for it to either make the next anchor point, in which case I can kind of move my stop up, or if it does come down, what'll end up happening is I'll just close at no loss, which is okay. All right. So this is working out pretty good today. And we'll just kind of see how it goes going into the holidays, and how it works going into Friday. So I hope that was beneficial for you, and we will look forward to seeing you at the next trading update. So thank you very much.